Hello, everyone. Welcome back to our session about fraud and identity. We've got three fantastic speakers with very interesting and well-combined backgrounds. We've got Sandra, Rutherford, and Martin, and they're going to tell you about themselves, and I'll introduce myself first. My name is Vesna McCreery. I am a subject matter expert in financial crime, so predominantly anti-money laundering and sanctions, ABC and so on, but fraud increasingly, but also regulatory technology. I am very much interested in the crossover between the two areas, so that's something that we will definitely cover today. Sandra, can we turn to your profile, please?
Yeah, absolutely. I'm Sandra Peaston. I'm the Director of Research and Development at Cifas, the UK's Fraud Prevention Service. I am particularly interested in this subject as I have recently co-authored the OIX Guide to Fraud Controls with OIX. And I've got the experience in working with fraud data, particularly in the area of identity fraud, as I created and authored the Fraudscape publication for many years.
Thank you. Rutherford.
Thank you, Vesna. My name is Rutherford Wilson. I am the Vice President of Emerging Technology at Trulioo, an identity verification vendor. My focus is to try to find new and innovative alternatives and products to help our customers fight against fraud, meet the regulatory requirements, and help their customers onboard in a seamless way.
Fabulous. And Martin.
Yeah, hello everybody. I'm Martin Ingram. I'm product owner for Identity and Access Management for NatWest Group. Today I'm speaking as a private individual, so don't confuse anything I say here with an official statement from NatWest Group. But my focus is really about the balance between customer journeys and the ability to manage risk and fraud. And I'm particularly interested in how we can start to use richer data sources as part of both the authentication journeys and also as part of things like an external customer digital identity.
Very good. So quite different backgrounds, and you all can also see the more detailed backgrounds in the attached material. So today we're going to start with setting the scene with the current landscape. And I wanted to turn to Sandra, who's been working with Cifas for over 20 years, which is quite unusual. Sandra, can you tell us about how you see the developments over the last 20 years and what are the most current trends?
So I think one of the key developments over the last 20 years, particularly relevant for this, has been that emergence in the number of cases of identity fraud. And that's very much been facilitated by developing technology, more online behaviours, more data available online, more avenues to use that data online, creating that opportunity for fraudsters to basically industrialise the use of personal data to perpetrate fraud. We're getting a better situation with increased controls coming in as well, but I think that's been certainly one of the biggest emerging features. It used to be that identity fraud was quite a small proportion of the number of cases that organisations were identifying and recording to the services that we provide. But now we're up to sort of 60%, 65% of those cases involving abuse of the identity details, generally of a victim of impersonation, a real person. So I think that is the biggest development. On the back of that, more recently, we've obviously got issues around APP, but I think for this subject, I think this is the key trend.
I see. And Martin, how is this affecting you inside the bank?
Yeah, fundamentally what a bank does is it manages risk. The risk from fraud and financial crime, we need to manage it. We need to both keep it within the bank's risk appetite and also ensure that, and ultimately ensure that we're not spending more on making good cases of fraud where the bank chooses to make it good. So there's a cost reduction aspect and there's an overall risk reduction component. But fundamentally, we need to think of it in terms of risk because we're never going to get to the state of zero loss. What we need to do is to keep it within the bank's appetite within the journeys that we think we need to offer our customers. So we need to both manage the risk and keep the customers happy fundamentally.
And what are the techniques you're using in the space to get there?
Yeah, what we're seeing is that we need to make our identity journeys more seamless. That some of the approaches that banks have taken in the past, sort of where to get to a second factor on an authentication journey, there'd be some bizarre and unfamiliar token technology that users would find a complete nightmare. That becomes less and less relevant, and we start to have to think about authenticators that allow us to build more trust in a more acceptable way. So things like biometrics are very widely being very widely adopted at this point. But the key underlying lesson is that for customers, this isn't their primary job. They want to get done what they need to get done, and they don't understand the security journeys. And we need to make it so that they can keep themselves safe. And they actually, they say that they want the bank to keep them safe, but then they don't really know how to express that because the language that we typically use doesn't resonate. And there's almost a translation job to make it so that people can understand what they need to keep themselves safe.
And before I jump to Rutherford with a question around that, I wanted to ask you one more question. When you are, looking for solutions that you're mentioning, some of these things are really cutting edge, and we are seeing biometrics. I mean, I use Santander accounts that have voice recognition, and I think HMRC have been using that for a few years. I think the government probably was ahead even of banks in that space. But do you find that startups and new technology companies are better at it, or do you guys build this stuff in-house? Or what are the solutions that you are favoring and seeing as dominant right now? Where do you turn?
Yeah, in biometrics in particular, it's very much about the quality of the algorithms. It's not the sort of thing that the bank has expertise in, so we look to buy in. But we don't see the large companies having great strength. So we've been buying from smaller organizations where the product is demonstrably strong.
So people are specializing.
It's a best of breed approach.
Rutherford, well, we've now set the scene for you. It sounds like you guys are doing very well in this space. Tell us about how you see the market right now and what's happening.
Well, I wanted to discuss a few points that were made by both Sandra and Martin. One of the things that I've seen, and I agree with Sandra, the number of identity verification thefts or fraud in incursions has increased greatly. It was interesting, if you look at the last year, as the world sort of had to deal with this horrible pandemic, we saw a small bright light, which was about 6 weeks where there was a reduction in identity theft fraud because everyone was in shutdown. The challenge that actually happened was after that small period, it has dramatically increased. There's been a huge rise, and we see that in real time as we're dealing with our customers. And that has really sparked me to kind of figure out ways that we can understand some of the new vectors in this new time. I'm guessing the bad actors had 6 weeks of invention time, whether, while we were reading books and watching Netflix, they are figuring out new vectors to attack us. And it really kind of brought to Leah that this is it's not just a game of technology, but it is a game of data and how we can best use data. And to react to what Martin really brought up is one of, I think, the interesting dynamics that you see is leveraging this new data and to either, whether it's authenticated sources or data sources that you can really authenticate a user and prove they are who they say they are, requires technology that is difficult to acquire and is quite disparate. So meaning in Martin's case, not only does he need to understand biometric information and all the different flavors of biometrics, whether it's voice, fingerprint, facial, or behavior, now you have to understand the patterns of algorithms of data that indicate fraud behavior, whether it's a SIM swap of a phone or a new email that's created. And so there's all these different device data points that is very difficult for a single organization to follow the best of breed approach. And so those are some of the things in terms of problems that I see.
I would so agree with you. Although now I'm a consultant, I used to be a buyer for many, many years. And one of the reasons I was so interested in what was going on in the industry and why I asked Martin about how they're dealing with it is that it is so hard for us in a banking environment with a vast variety of issues internally to deal with, lots of different regulation, lots of change, lots of transformation, to also understand who is who out there and what's a good product, and then deal with so many, especially since now we have so many different smaller organizations who really don't always know how the banks necessarily work and the processes and procurement, and maybe can't even survive that long process of like 2 years of, procurement cycle for new technology. I mean, a lot of banks have improved and speeded it up, and all of that is true. But at the same time, it's quite tricky for us inside large organizations to deal with that. So how do you see that, maybe Sandra can jump in from her experience of various banks. How do people deal with that? What do we all see? How do we overcome that?
Well, I think there's a couple of things to unpack there. I think one of them comes back to actually the question that you asked earlier, which was around sort of whether or not it's easier for new starters in the area. So if you start looking at the more challenger banks, which are entirely digital, then I think they do have an advantage when it comes to integrating some of these technologies, because they are basically starting from a blank slate. I think if you look at some of the legacy systems, and particularly some of the bigger organizations, particularly when they've had mergers as well, and they've been trying to integrate different systems internally as well, that become a challenging thing to do. And I think there's also a consideration around actually what is your customer base? Again, if you're looking and you kind of challenger bank startup organization, then their target market is probably the type of person who's got an expensive handset in their back pocket, which is capable of doing all the biometric test checks and all of that sort of thing, which gives them a bit of an advantage over organizations that still have a customer base which isn't yet in this space. I mean, it's clearly, as time progresses, that a proportion of the customer base shrinks, but still I think that's got to be a consideration, which is another challenge for particularly the more established financial services to overcome, is around that.
That's a very insightful point.
Yeah. Personally, I think I see much more third-party platforms bringing particularly those disparate data sources together to consolidate feeds for organizations to simplify it. I think that's got to be the way to go. Otherwise, there's some very complicated knitting going on in the background, which is going to be hard for people to keep running.
Rutherford, you were going to say something?
Yes, thank you. I think Susan really hit the nail on the head when you look at let me back up. Many times we talk about who can access various different services and who your customer is dealing with. We often forget that much of this way the technology is flowing and how data is organizing favors a certain type of person in the world. And we often talk about the unbanked. Well, there's also those people who need access to services who do not have access or have an identity profile or a data set or all the common trends that we typically use to verify someone, who is increasingly required to have these items in order for them to access services. And so one of the issues that at Trulioo we do take seriously, and is a pattern, it is a principle for us as a company to try and help solve. So deciding and understanding who needs to be verified or which services they need to access is sometimes an often underlooked aspect of many people when they go to battle to onboard people. And so I think Susan really brought up an excellent point there.
Can I just ask you something that really has kind of tickled my imagination? Is there a link between fraud and identity, and also the kind of unbanked side versus the more, I don't know, a wealthier side of the society where these, smartphones with lots of apps and whatever you can put on them are in a better position. Is there any do the fraudster exploit that difference in any way that you can see? And you both probably see it from your own angles.
So in terms of the cases of identity fraud which are identified and that we see, traditionally it's been a older demographic. There's a few reasons for that. One is where identity fraudsters are actually targeting higher value products. They need to be using identities which are more likely to be approved for those products anyway. So if you want a 10 grand loan, you need to impersonate somebody who's going to pass a credit scoring threshold for a 10 grand loan. So there is a balance within that. We saw that change somewhat when we had more kind of payday loans, bridging loans, that sort of thing, much lower thresholds. So there is a discrepancy in the demographic of people who are identified as being victims of identity fraud across a different range of products. Telecoms, so phone handsets, that sort of thing, tend to be younger, smaller, shorter term loans, again, younger demographic, up to the more high value products tend to be sort of still towards the 40 plus range is probably a reasonable way of putting it. But I think it's one of the things is around that piece around how people are identified is that there needs to be channels for people who are more difficult to identify to still access those services. But what we haven't got is a way to identify who actually needs those routes. So, if you turn around and say, I've got a passport, well, I'm applying for a product, why wouldn't I be using my passport to do that? That doesn't mean that someone can't try to impersonate me and choose a route that bypasses that under the guise of not having that documentation. So it's an interesting issue about who gets targeted for what.
Rutherford, what's your view on that?
Yes, well, I would agree with everything that was just said. I would say that there's been a new set of vectors as more services are available online, and as we've seen, since the pandemic, more people are engaging in those services online. This is going to sound a little cruel, but there's a sort of democratization of who's a victim of identity theft in these days. And that's a product of two, maybe three factors. One is the massive amount of data breaches that have occurred over the last decade plus. There's so much data on the dark web. The second is more services are available online, and new startups may not be as they may not understand exactly how to fight against fraud, or may not have the resources yet to fight against fraud. So that creates an opportunity for additional data breaches. And the third
you mean
factor,
like financial institutions who are startups, like fintechs as opposed to regtechs?
Exactly. And I think, but it even goes beyond that. Gaming. There's a big growth in gaming, cryptocurrencies, remittances. So the world of the fintechs has expanded in terms of, let me just say, the world where financial information and financial transmission, especially three-party transmission, has grown dramatically over the last several years. And I think that element has created a new dynamic. But I think the critical one is bad actors have gotten, well, I wouldn't say, they've always been smarter than the average bear, but they've gotten even smarter. And so they're leveraging technologies, they've gotten more organized, and being able to access this data becomes a path of least resistance to, as Sandra brought up, if you want to do an identity fraud against to get a 10,000K loan, you have to find someone who is valued at that loan. Well, if you can put together a system that can grab a million records online, sift through them, and try to find the ones that have a valid credit card attached to it, then you can create a product, a bad actor product, so to speak, that can attack hundreds of thousands of people in seconds. And even if each opportunity yields maybe $10, that is still now valuable for the bad actor.
Yeah.
And so the economies of fraud have changed dramatically in the last decade.
With the data. Martin,
Yeah.
sorry, Sandra, you wanted to say something?
Yeah, I was just going to add to that. Completely agree, and I think if we're using our example of someone trying to get an expensive product, that doesn't mean that the identity fraudster isn't trying a whole load of identities that don't actually pass that threshold. What that means is we don't see it because they get credit scored out. So there is that volume of attack which is happening. It might be that only a few of them actually do get to the point where we actually identify them, because the rest of it, it's at the scorecard and it's bounced with.
Good
Essentially.
point. Yeah. Good point. But Martin, how are you? What are you seeing on your end, and what are you doing about?
Yeah, no, I do like Rutherford's phrase, the bad actor product. I think that actually sums up the way that attackers attack banks at the moment. It's not chance. It's not people looking for a single weakness. It's people's businesses. This is what people what attackers do, and they'll do it to any of the banks that show a weakness. And so fundamentally, we individually as banks, we need to make sure that we're hard to attack, and preferably that we're harder to attack than the other banks, so that the attention goes elsewhere. And so that really takes us into the realms almost of an arms race. You need to be better than the other guy. It's like I don't know. I'm watching a nature program, and the lion's not attacking the animal that's at the front of the pack. It's getting the one that's towards the back of the pack, because that's easier to do. And I really do quite like that idea of a fraud actor product, summarizing what they do to actually make an attack real, and productizing.
But there is also quite a lot of cooperation between banks, as far as I know, and I'm sure Sandra sees a lot of that. Isn't that so?
Yeah, absolutely. I think certainly those organisations that we work with. So, like, it's a case of definitely yes, but also yes. What Martin said, because within investment sharing, data sharing, that's really collaborative. That doesn't mean that the bank still doesn't need that weak link at the back. So I think there's a lot of collaboration around sharing intelligence and data and hardening the entire industry against fraud. But it was one of the things that we saw when, particularly, again, coming back to those payday loans, there was a few organisations that popped up that clearly paid absolutely no attention to putting in place fraud controls, and all they were interested in was getting money into consumers' accounts in 15 minutes from the point of application. And they got, unsurprisingly, targeted incredibly hard. It drove at least one of them out of business. And again, banks are much more robust, but you still don't want to be the one that's being targeted because there's a weakness or a perceived weakness.
On the anti-money laundering and sanctions side, there's quite a lot of cooperation between banks, and they are even joining the government. So there's the whole private-public initiative, and I'm sure you're all aware of that. It's kind of very strong in the UK, and it's been picked up very strongly in the US, and I think other jurisdictions are following. How do you see cooperation between internally and within the industry between those elements that are AML, anti-money laundering, maybe sanctions less so because it's kind of more binary, with fraud? Because in my mind, fraud is, of course, operationally to some degree different. You want to stop it in real time, as opposed to anti-money laundering, where you're doing transactional monitoring after the event because you're looking for patterns. But one feeds the other. So can you, maybe Martin, you can talk a little bit about if there is any overlaps from an identity perspective that you are aware of, and maybe Sandra can also talk about it.
Yeah, AML, I have to say, isn't my home base. So, but I certainly see that identity plays a key role in AML. And as I look at things like external customer digital identity, the opportunities to start to understand an identity of either a payee or a potential customer of the bank better than we do today has great benefits, because it's quite difficult to do crime if you can be easily identified. It leaves you really in the with the money mules as being the actors, because everybody else gets eliminated. So identity clearly is a key aspect.
Sandra.
Yeah, completely agree. If someone is fraudulently obtaining a bank account, one of the main reasons for doing that is to be moving illicit funds through it. So it's hard to completely decouple those two issues. They're treated differently, but in terms of one activity certainly enabling another, yeah, really tightly connected. And I think a lot of the work that's been done through the likes of the Joint Fraud Task Force, which is private sector.
Yes.
Government has been attacking or tackling some of those issues, which are those enabler activities around then that lead into the AML area. But yeah, I think you're looking at those big connections then being the use of false identities to establish accounts through which to launder money. And when that gets difficult or it's easier to recruit mules, then again, you've got fraudulent misuse of accounts, and that fraudulent misuse is moving illicit funds. So yeah, they're connected, certainly.
Rutherford, you must see it from the sales perspective within your organization. I think you're just as well known in the AML sphere of identity as you're clearly in fraud. So what's your view on those two areas, similarities and use of data?
Well, I think as an industry professional, it is always a good thing to have as much collaboration between as many entities as possible. As a personal person in this, I do think a lot of the laws, especially the one in the UK that I had the opportunity to negotiate with them on several years ago before it went into focus, it skirts a series of lines of privacy, of independent privacy, that I think is it's sort of like a double-edged sword. In order to get this cooperation, that I think each consumer wants that collaboration so they can operate online with safety and trust the organization that they're dealing with. But the laws and that type of collaboration that is done needs to put as a primary focus, privacy of individuals' data. And I think there's a lot more work that needs to be done on some of the laws that are in place, especially UK and in the US. There's some laws that are happening in the Australian that I think are taking a more serious look. But I try to keep actively looking at how these laws are being written and who are they in favor for. And I think that's one of the dynamics that is always going to be an interchange that's going to play out. But it's one of the things that is always, we should all be vigilant on to make sure that our end goal is protecting the consumer. And I think that's one of the dynamics that is there.
So as we talk about that, do you think that maybe Martin first, do you think that it's possible to take a holistic risk-based approach in our organizations, banks and other financial institutions, profiling customer behavior, appropriately escalating that? You talk about consumer issues. I think the APP fraud that Sandra talks about is something that really crosses very much financial crime, as in, AML and fraud. It seems to be talked about in both communities as one topic, because it is. How do we bring, identity of a customer is an identity of a customer. It cannot be different between fraud and AML. And when we talk about KYC, how could that be any different? What's your view on that holistic bringing together of these risks? I know that it's not easy, and I know it's a huge question. We can talk about it for days. But what's your sense? Are we going in the right direction?
I think that from an identity perspective, it's the same identity, and KYC applies. The KYC may vary based on the product that a customer's bought, but fundamentally, the building blocks are still in place. I think it's really about the process and what what the customer's tried to do. So what's the process that we run at the point where a customer has tried to do something? Do they come together? I'm not sure. I'm not sure there's any great benefit, given that the way we respond to them is so different. We will look to understand the risks within the bank, but then and we'll do that as part of the identity journeys. What happens after that in terms of, is it a stop? Is it about a notification process within the bank that then looks at it from an AML perspective? That then is fundamentally different. And so I'm tempted to say there's a branch that happens there, and the branch happens for a reason, because they are different.
Yeah, how you manage risk still has to cover the risk rather than have artificial joining of reporting. And yeah, I understand what you're saying, and I do agree in that sense it's necessary. Sandra, from kind of a wider industry perspective, do you talk much to other associations that are more on the financial crime side, and what do you think?
So I think, the organisations that we talk to mostly is probably UK Finance, obviously, but again, more having those conversations on the fraud front rather than cross conversations between fraud and AML from I'm not going to say trade association, because we're not a trade association, but organisations working on behalf of the likes of those financial services. I think one of the issues that we've got in bringing together some of the conversations around fraud and AML is that almost that Venn diagram around kind of what sits in the fraud space, what sits in the AML space, and then you've got that confusing bit that sits in the middle. And there is often a bit of a conversation, and there's a difference of opinion across different organisations about sort of which side of the line certain things that sit in the middle of that Venn diagram actually should go. You've got some organisations that have been bringing them together, some that have been keeping them separate. But one of the things I think is potentially quite interesting is where you can start looking at more emerging, more increasingly adopted ways of accessing financial information to see whether or not there is the capability there for almost a bigger picture of an individual to self being developed. So whether or not some operators in, for example, an open banking space, if you're looking at attempting to prevent APP fraud, then if you've got one central place where someone can assess the various different transactions, for example, that are made over a range of different accounts, or from a range of different accounts, you might start to look at actually where that bigger individual picture can start being pulled together. But I still don't think that necessarily answers the question of how that gets dealt with, and that split between fraud and AML.
Yeah, I think what Martin says is fundamentally right. It's that you probably have identity and collecting of that identity, which is something that people can have Trulioo help them, being very similar. But then how you deal with the customer on the back of it could be a little bit different as processed internally. At the same time, transactional monitoring can benefit one from the other for sure, but that's a slightly different area. But I thought that, we can't avoid COVID. It's been such a huge part of all of our lives. Probably for the first time in human history is that almost every human on Earth has shared something so similar through these lockdowns and various pressures that has caused in so many different ways. What have you seen, Rutherford, you started telling us a little bit about that, how there was a dip and then a rise and a huge rise. What else can you tell us about other trends that you've seen there in identity, in fraud, and so on? Ways to control it.
Yeah, it's hard to really kind of go into all the different vectors in this very simple way about how identity fraud is being attacked. But to simplify this, the number of transactions in terms of onboarding, just look at the number of people who have to onboard, has grown significantly. and the tools that people need to then enable to actually protect against identity theft.
Sorry, do you mind me interrupting you? Apologies.
Sure.
When you say the numbers for onboarding have grown, is that because the online onboarding has gone up? Is that what you mean?
That's what I'm saying, yes.
Mm-hmm. Okay.
Yeah, so and because of that, at least from the data that I've received, fraud attacks have gone up significantly as well. There's just more out there. I think when it comes down to identifying and how to defend against fraud, these types of new vectors of fraud, is how are you going to understand who your customer is and understand what sort of friction you can bring to protect against any potential bad actors. As Martin sort of discussed at the beginning of our conversation, there's a certain tolerance that certain customers will accept and will not accept. And I think that is an important factor to understand. For example, if you're a business, your tolerance for having to go through a certain amount of steps to that a bank or a fintech or an organization may put in front of you may be greater tolerance than an end consumer who just wants to sign up for a Twitter account or something simple.
Yeah.
And so, well, the way I look at the world is I try to figure out ways that we can give products to the Martins of the world and to the fintechs of the world to allow them to define a dynamic flow that can scale based on presented fraud attacks that we have seen and add friction to customers. Because if we see a risk with a customer that's going through an onboarding, that doesn't mean that that person is bad. It just means that there might be an increased risk. And so we want to be able to figure out ways to add additional friction to those people that we think may be risky so they can mitigate their risks. We're launching in a very soft way a product, we call it the Trulioo Global Gateway Bank ID, very long title. And it's a way for us to leverage authenticated data sources or more authorized data sources, like banking, the identity associated with a customer's bank account. Using various new regulations like PSD2, we can, through a consent basis, ask the customer to allow us to access their bank account. And now we can pull down the identity information from their bank account and use that as a way of authenticating the user is who they say they are. So that's something that a customer may want to do, not for everyone who's trying to onboard, but if there's a perceived risk, this may be a technique that can mitigate that risk and use these authorized or these more authorized data sources to understand and validate the person is who they say they are. And so those are some of the techniques I think will help when we bring these to market, will help customers battle fraud in their particular spaces.
Martin, do you have any comment on this, or maybe other techniques that you see, use, favor?
It's an interesting area because it's about risk in the end, and we see people tackle risk in different ways. So as a bank, as a traditional bank, we have a developed over time approach to managing risk. As we look at some of the fintechs, then we see that they go about it in completely different ways. And so, being able to open an account in 10 minutes, you sort of go, okay, that's good. What have they done so that they can deal with that? And you come to the conclusion that it's fundamentally...
And what haven't they done?
Well, what haven't they done? And what are they putting off? Because, opening an account within itself doesn't necessarily expose you to an awful lot of risk. So are they looking to increase their trust in that account over time? And that's an interesting and valid point. You go, okay, they've opened an account, but there's no credit associated with it. There's very little the customer can do other than spend money that they'd already put into it. Are they managing their risk later on in the process? Whereas the traditional approach has been to try and account for that risk right at the point of opening the account. That doesn't say that either approach is inherently better, but you need to look at these approaches and understand how they might help you, taken together, build an approach that better meets the customer's need while managing that risk.
Well, I think that this is where financial crime, like AML and sanctions issues, come in, and why there has been that traditional approach. but I'm not going to go into that right here. But there are reasons why that is so. And actually, we've gone from allowing account opening to not allowing account opening until the full CDD is done in the way that banks do, as opposed to the very quick way. But of course, the services and the reputation of banks that you can use when you're doing your, criminal business is probably much greater to some degree. Although things have been, I think, changing. Now with fintechs, there is a certain amount of leverage, and there is Arista banks who serve also as rails to a lot of fintechs as well. So there's a kind of circle of risk there.
Yeah, it certainly informs the conversation, though, and it makes you think about what the possibilities are and what the actions we take do to actually try and mitigate those risks.
So would
because
you
we're seeing
have
other
any
approaches. Go on.
Practical thoughts?
I think it's about understanding all of the data points that you can potentially get. And using those to build an overall picture of the risk that you're seeing for that customer for what they're doing, and that's a direction that we're taking. It's at this stage I think it's more of an experimental approach because there's so many potential areas that we could look at, but until we actually start doing it, we don't know quite what we're going to make decisions based on. There's a learning process in this.
Fair enough. Rutherford, what would you advise a client to do in this situation?
I would advise them to take identity verification and fraud detection very seriously from the very beginning, but also understand it's a marathon, not a sprint. You'll need to, as your product and your customer base grows, understand exactly when you are entering into a new phase of risk as your journey with the customer exists. I think Martin really brought up a key point in meeting various different regulatory practices in KYC around the world. You are required by law to kind of complete the whole CDD and KYC process at onboarding. However, you may not know everything at that point in time. And so you have to continue to evaluate your risk, which we traditionally call the transactional monitoring or AML. But I think it goes beyond that for many new types of customers. Is the customer logging in the same way into my online service? Are they clicking and behaving the same way as they access my online portal? Those are all identifiers that need to be brought into this picture to understand, is the person truly, not just are they who they say they are, do they continue to be who they say they are? And those are things that are hard to do day one. So my advice is start with the simple things and then continue to add on. Continue to make it part of your IT practices and your investment model as you grow your business, because fraud is not going away and your business hopefully does not go away. So treat it as a marathon and build it into your business. That's what I would say. And use the products that have been, tested and true that work.
Sandra, you keep nodding, and it feels like you have a lot of thoughts. Go
yeah,
on.
Absolutely. I think that's exactly true. I think there are a lot of excellent technologies which are being increasingly adopted, which make it much more difficult for someone who is not the account holder to do things like access the account. You could almost make an argument that making a customer put a password into a box is that is pure friction for no particular benefit, considering what else he can do in terms of verifying that they are still the same person re-accessing that account. Wouldn't necessarily advocate taking it away because some consumers like having put a password in a box because it makes them feel
and
like
regulators.
Yep.
Isn't that the new regulation that forces you to enter your password every now and then, even though you can have face recognition and stuff? It's like, really? My finger surely is more unique than my password, but hey.
Finger, and again, coming back to the way someone's actually interacting with the device, which in some areas gets away from some individuals who don't want to use or enable the biometrics on their device for reasons that they have their own concerns around. But, if you can turn around and you can say that this person is interacting with that device in a way which is consistent to the person who I know opened this account, then that's quite a robust process. That what you can't do is use that at account opening stage. So you're essentially starting from that blank slate because you have no existing footprint. You can turn around and say, is it a human being? Is it not a robot? But you are building that picture up. And this comes back to one of the issues, which I think is quite key to all of this, which is, getting it right in that first instance. There's obviously a lot of movement in the area around reusable digital identities, DCMS consultation that there's been recently, and some emerging schemes around that. And if someone has got a robust identity they can assert, that's brilliant, as long as you put it right in the first place. And it's that kind of repeat use of something which you need to have that confidence in the first instance. But you can build that footprint of what is real for that person. But you need to start from that blank slate, and then you need to put your trust in other things to base that on. So do they have a strong document? Notwithstanding that, how did they get that document in the first place? But you can go an awful way down the train there. But yeah, I think that piece around being able to be really robust in the securing of ensuring that the person who is using an account is the person that opened an account, it is an area where it's got much stronger.
So this is really, I mean, there's so many tangents we can go off, but I want to use the last few minutes to look at this from a consumer perspective. So I'm the user, and, what's in it for me, and that's what is like, what are the complications that users have with all this technology? You mentioned at the very beginning how, not everybody has the smartphone with lots of memory and lots of, apps on it, and whatever else is necessary. But then maybe people's habits change, or they change a phone. Could it affect them? Could it, create problems? And then I also want to talk a little bit about educating customers. So Rutherford, can you talk a little bit about what issues do you see with all this technology, what it does? If I'm oversimplifying it on purpose, it tries to create patterns out of everything. But I feel like computers can't always predict how humans really behave. Does identity verification sometimes cause unfair problems to people, to consumers?
Yes, it does. Although humans are pretty predictable, so I think the issue is.
I feel better. Good.
And I do think
I think a lot of consumers are afraid of that machine is going to slot them into something they're not, and is going to force them to behave in a way that they're, maybe they like to change. Do you know what I mean? I'm sure you've heard that.
I know exactly what you mean. But I think to answer your question from the consumer point of view, what consumers want is ease of use. Yes. And they want security, they want privacy, but we're victims
sometimes
of
conflicting.
They are conflicting, exactly. And we're victims of our need for the now. And so we want the thing, we want the bank account, we want the product, we want it now. And so, and they don't want to have to go through a lot of hoops to do that. And I think that's fairly universal. And interestingly enough, I recently read this funky report, but the phones, there are more people with smartphones that are modern in the world than there are people with computers. And I mean, that's been a fact for quite some time. So I think the tools that we're using for identity verification are there. The data is not necessarily widely available to verify people. And that's where the problems come in.
What do you mean?
Let me just give an example in APAC. If you are, I don't remember the country exactly, but maybe it's Malaysia, there's limited data sources that, Trulioo can find to verify someone with as least friction as possible.
And like CDD stuff, KYC
stuff. Yeah, the
stuff.
CDD stuff.
Yeah.
Mm-hmm. And if you require, as a business, if you're required to capture a passport or identity verification of some sort, then you have to translate from, non-Latin characters into English, and all of that creates friction. And so what customers want, what consumers want, is they want this to be as passive as possible and as safe as possible and as private as possible. That's what they want. The challenge is making that happen. Because of all the difficulties of, not interjecting, friction that doesn't make sense to the consumer. Why do you need my ID document when I just told you who I was? Is something I've heard. Worst case scenario, why do you need my bank account statement? Many times if you're doing any kind of transmission of funds, like a casino, or you need to make sure that you're required by law to verify the ownership of the bank account so you can have meet the AML policies. But if you need to send your bank account trans statement with all your transactions, there's all that. They don't want us to do that. So they want to find ways where that can happen, but it can be fast, and they have some privacy in the process.
Yes, and I think that there is definitely, and that's why I think education is an interesting topic here, and I'm sure Martin will have a lot to say about it if he's willing, if he can say. But you've mentioned GDPR. These are conflicting priorities because, as a consumer, I know how I feel about it. And then when I'm writing global policy for, Barclays or somebody about this and that control, I also see how the two really don't work very well. Or when I need to sanction screen a customer, or when I need to review whether the outgoing payment actually makes sense from an identity perspective of that customer. Is it APP? Is it not? What and now you have all these warnings, and you're like, oh, he's asking me again if this is my husband or not. Ridiculous. But how is the bank going to do it? And so it's a constant friction. It really is tough. Martin, are you suffering?
I'm not suffering. I think that fundamentally we're the worst people to answer the question on what do people think about security, because we're so embedded in it. What we just don't understand the confusion that's out there in people's minds. Sure, they want to get done what they need to get done, and they want to stay safe. They tell us that, but fundamentally they don't know how to do that, and the messages that we give them are frequently so conflicting that actually in the end they go, okay, so what do I need to do? I've got to get past this. So what do I need to do? I'll do whatever I'll share whatever with whoever because it gets me done. And is that a risk? Well, I don't really know, because I hear all this stuff about huge breaches. I see all this advice that sometimes it doesn't make sense, and you can't see why doing this makes you safer than doing that. And they kind of go, okay, cross my fingers, I'll do it, and they move on. We need to make it clearer and simpler for people to understand when they're putting themselves at risk, so they can make a more informed decision. But they're never going to look at it in the level of detail that we discuss here.
But think about the GDPR. Do you accept all my cookies? And you have like options to choose. I mean, I just go to sleep when I see them, and I almost never do. But I see people who go through the options and click them, and I think they're probably right. But it's my desire to get it now. I probably think,
I'm one of those people that goes through.
Well?
I'm one of those people that goes through and I turn stuff off. Sometimes Smart. I think I'm mad to do that. It's fundamentally what we're doing is we're putting an obstruction in the way of people, and for the tiny minority, which includes me, then I use that option. For most people, it's just get that thing out of my way.
But there's no other way, really. There's always going to be a balancing act, no matter what level of technological advancement we have. There's always going to be a balancing act, because fraud is going to continue developing and getting more sophisticated, and we're going to continue developing and getting more sophisticated in defending it. Maybe sometimes we go ahead of them. Generally, we feel like we're behind, but I think things are better today than they were 20 years ago, Sandra.
I would agree. I think certainly awareness around fraud issues, particularly amongst consumers, is a lot higher than it was. We do confuse them still. We talk about the same thing using different terminology. That doesn't help. I think there is still, though, that kind of underlying drive, which is that I want it to be really easy for me to do the thing that I want to do, but I want it to be incredibly difficult for the fraudster to do the thing that they want to do, and those two not necessarily entirely compatible. But understanding gets better, knowledge gets better, technological tools to help people out are getting better. But we still do have this fundamental kind of weak link in the chain, which is that human behaviour. And what we're doing is we're attempting to reduce the impact of the human behaviour as much as possible, to reduce that risk, to help us understand the risk better. I think coming back to what Martin's been saying around kind of where that fits in with risk appetite. So I think, yeah, I think we are in a much better place. We have more tools. The fraudster has more routes to attack, because the same technology that gives us the tools to defend against it also gives the fraudster the tools to create those attacks in the first place. Coming back to the fraud products, it continues to evolve and develop. I think it's not going to change. The fundamentals of fraud remain the same. It's just the manner in which it tends to be carried out which develops.
Rutherford, are things better?
Yes, I think things are better. From my point of view, they're in the industry for those companies like Trulioo who provide products to help. You see that they're getting smarter and they are providing better products overall. So from that point of view, it does mean it's getting better. If I had my way, I would snap my finger and create a single tool that takes away the need for customers to have to learn all the best of breed products out there and just integrate that into a single platform. Because then that will make it a lot easier for businesses to, be able to be future-proof themselves with their integration as they go forward. And I think that becomes a way for them to focus in on how they're making decisions about managing their risk, as opposed to having to learn the nuances of the technology and what's coming next and how is it going to work. I think that's where the trajectory should be going towards. And I think that will be another evolution of where the tools and the technology can help make it better.
Martin, are things better?
Yeah, I think they are. I think we're slowly getting there. I think that the thing we need to be aware of is that human gap, because if we look at the fraudsters, it is their business to defraud. The customers just want to use the service. And so you've got someone who's prepared to put in an awful lot of effort to break something that everybody else just wants to use quickly and simply. And so there's an imbalance there. I think that understanding will help. I think the technology helps. But we've still got a long way to go. And we will never beat fraud or money laundering completely. What we can do is control it as well as we can.
Good. So things are getting better. And on that high note, I want to thank Sandra, Martin, and Rutherford for joining me. And I've learned a lot today. Thank you very much. Come and see us again.
Thank you, everybody.
Thanks.